Good weekend and good Independence Day. We are open on Monday, but remember, you're going to have abbreviated hours on different markets. Be ready for thinner trade as we get through the weekend, and then Tuesday. And then when you come back, a lot of people aren't here. You know, a lot of people take, when you get a holiday like this off in the middle of the week, they just call it a day. So who knows where you're going. The important thing is today, what do? The markets come to the end of the month, the end of the quarter, and look behind me. It is basically a sea of green. Now, the markets that got hurt were in the grain markets. Why? In one of the big surprises, I've never seen this big of a surprise in a June acreage report. There was a massive shift out of soybeans and into corn acreage and some additional wheat acreage. Well, that just took the markets. And normally this is a report you can snooze at. Wow. The opposite. Then what happened here? Well, the marketplace is just saying it's all systems go. It doesn't matter about the Fed chair this week meeting with other central bankers saying 2 more rate hikes coming. You get economic data that points, I think it points, that you still have very strong labor markets. The market just doesn't care. It is saying, and I've explained it all week long till I'm tired of saying it, that we're close to the end of that. The lag effect isn't going to be that important because you've got so many people employed, and the FOMO is at work. Do you know what FOMO is? Fear of missing out. Fear of missing out. If I don't get in now, I'm not going to get in, and this is going to run away on me. I've seen that. I've seen it work occasionally. More times it ends up in a disaster area. At the end of the day, the market does what it wants, and I'll stay with charts. So let's go to the charts and see what we've got through all this. We're looking at this time, this is all weekly charts with the exception, excuse me if I cough, we got that crazy smog again from Canada. The monthly area chart of closes. When a market is over an 18-month average, an 18-week average, an 18-day average, I have a bias to the upside. When it's under it, I have a bias to the downside. What's the beauty of that? The beauty of it is it filters out signals and forces you to be with the market action in relation to that moving average. Now, the people that will hate that are the bottom pickers. And the top pickers, this market is not going to tell you to go short there, and it's not going to tell you to buy there. Okay. But it is telling you along the way to be short, and it is telling you along the way to be long. I'll take that. When you come to the weekly chart, up and look at this. You gained another 2%. I've read reports. I've had clients sending them to me. Are we going to go parabolic? I don't know. Honest answer, I don't know. When the fear of missing out takes over, all things rational are thrown to the sideline. So let's see if the charts give us any ideas, because at the end of the day, I want to tell you, the smartest thing you could do is throw the name off a chart. Rule number 1. Rule number 2, have your rules. Adhere to them. So let's forget that this is an S&P or anything else. You have a market that's got higher lows, higher highs. We have an outside week up. If you've taken my outside day trading course, there's a very specific rule. This week's lows should not be taken out this coming week or the week after. It's a continuation to the move up sign. If it is taken out, there's downside targets that immediately come in, and it's called a trap. End of discussion. Do we have a bullish crossover? We might get it. Bullish crossovers occur when a shorter term moving average moves over a longer term. Well, this is the 18-week and the 100. It could certainly happen. And if it happens, it's even more bullish than you think in this sense. You've got the 200-week down here, then you'd have the 100-week above that and the 18 above it. It's a classic bullish setup of the shortest term average over the medium term over the longer term. Where's the resistance? You're on it. This is what keeps holding the market back. When you go to Bollinger Bands, you can ride them up. You can ride them indefinitely higher. Closing over them successively, nah. You rarely do it more than 5 days, 5 weeks at a time. Rarely. It can happen. I've seen it go 7. I've seen one time, I think 9. You don't play for those. Those are like going into the slot machine. I'm going to win that $30 million slot. You know what the odds of getting that are. Play the lottery. When's the last time you won the big lottery? Got what I'm saying? I'm not saying it can't happen. The probabilities aren't there. However, it is a bull market. You're not looking to be short. You're not looking to be a top picker here. The trend is up, the bias is up, and momentum is locked in. Until the red line closes underneath 79, deep breaks in the market will be bought. There is a way to buy it. If you've taken my enhanced Bollinger Band course, it's exactly there for you. So I view a market in an uptrend, fighting the resistance of the Bollinger Bands. No telling how high it'll go at this point, but we should not take out this week's low. Otherwise, flash warning across the board. Same thing in the Dow? No, you don't have the embedded reading yet. You have an overbought market. It takes at least 3 weeks with readings over 80. So week 1, you didn't have it last week. Need I say it? Both numbers are not over 80. So you're overbought. Logic tells me that big resistance will be the upper band. You haven't hit that upper Bollinger Band, by the way, since all the way back in December. So 6 months ago is the last time you hit it. That gives you an idea of how strong the market is. Certainly the trend is up. A big warning sign would be you take out this week's low, this week or next week coming up. And that tells me that the odds would favor strong. You're going to go back to the 18-week average, and you might even get a pattern that turns bearish in the process. You got to keep your eyes on it. In the NASDAQ, do you believe in the power of embedded readings? Look how they're carrying the market higher. You had a bullish crossover. This took place just now. So let's take a look what this now means. Here is the market when you had it, and this is the week I'm looking at, the 16th. You didn't have it. Last week you had it. It means to me the market should now, somewhere along the line here, regroup and try to take out that high. Okay, and that number was 15,324. You just hit 15,376. Made the new high. So some of these rules, they're pretty interesting. Again, an outside week up. I don't want to see this taken out. Bullish crossover. We have the pattern of higher, what? The 18 is over the 100, 100 over the 2. You have classic bull market. Where, if you broke hard, would you look for support in any of the indices we just talked? Certainly the 100 and the 18 together as they are right there. The Russell? No, the Russell's a whole different setup. It's the only market that's got the 100-day average above it with the Bollinger Band. A lot of resistance, and it's not embedded. So long. I know what's going to happen. The average guy's out there is going to say, you know, the market part that hasn't missed yet, and I'm a member of that fear of moving out. I'm going to buy those stocks that make up the Russell. There's a reason they're weak. In the 30-year bond, you have this sideways action. I don't know how to scream. If I can come to you and tell you, this is where people get chopped up typically. When you see this, run from this pattern. This is a pattern setting up a big next move, whatever that move is. You had this pattern back here. And when it finally broke out of it, it was a big downtrend. It could easily be this sideways action is calling for the back end of the bonds that we've seen the peak. Maybe the Fed pauses, doesn't skip, doesn't do nothing, whatever he wants to call it. Maybe the Fed is through. Maybe the Fed goes again. But guess where the Fed's actions are taking place? They're not back here. They're in the short end of the market. They're not at the long end. So this market is waiting for another event, whatever that event is. It's not adding a lot of yield. You get that yield added as you're taking these markets to the downside. When we look at the dollar index is stuck at the 18-week average of closes. And it's sort of like the bonds right here. Look at how the sideways action of the Bollinger Band is. You go down, you hit these numbers. I expect them to be hit regularly, but you're not going anywhere on that big downside. It's not enough to run against the market. Now I get a brand new sell signal if last week's low is taken out. it's unfortunately right below it is where all the supports are, 101.36 to 155. Can I get anything going to the upside? Sure, if you get back and stay over the 18-week average, which the market is so far refusing to do. In the euro, we have had a pattern of lower highs, lower lows, and it's right into the support of the 18 and 100-day average. You had a bullish crossover. The 18 just got over this, but prices pulled back to it. If I'm right, before you take out this low, you'll pop through that high and make a run for a higher high over that number. That's my guess because of the crossover. You got to prove you can stay over it. In the Canadian dollar, a lower low, higher high pattern that's running the upper Bollinger Band and overbought. I wouldn't touch it with a 10-foot pole if I were sitting next to you. In the Japanese yen, why wouldn't I stay bearish? Until the Bank of Japan intervenes in the market, I told you 3 weeks ago when the statement was made, the markets will test the bank. You don't think that's called testing the bank? It's exactly what they're doing. If they want to sit pat and do nothing, that's fine. The markets will test them to find out the level that they'll do something at. In Bitcoin, well, it certainly helped that Citadel joined forces with BlackRock. They created an ETF with credibility, supposedly. Well, that lifted this market. I mean, let's get serious. The week before, you went up big, a small correction, overbought type area. If we look at Brent versus WTI crude on a longer-term basis, all you did is come up to where you should fail at the 18-week average. When a market's deeply under it, you can rally back and fight your battle there. That's what's happened. You did it again. So I don't look for a big difference in it. But what happens this week? OPEC meeting. Now we find out, how does OPEC deal with the increased production? You heard me, increased production out of Russia, not meeting any of the goals that they say. They're liars. You know that. I know that. The world knows that they'll come out and say, no, we have done it. And then you look at the seaborne activity. Well, where's that all that oil coming from? It's like the Biden administration with Iran. We've got the sanctions. They're not existing. They're over 2 million barrels a day in production. What do you mean they're not selling? And who do you think's buying? The same culprits buy all the time. So the question is, the other OPEC members that keep losing share to Russia, and that is exactly what's going on. Russia is aggressively selling its oil at approximately $25, $26 a barrel under its competition. Yes, they got to pay more to get that there, about $6, $7 a barrel, freight and that. It's still a discount. Everyone's scared to take them on in OPEC. They don't want to see a price war. They don't know what to do. The war's going on. Putin has his own problems, and they know he can get off crazy. They've seen it. They saw the price war that happened between Saudis and them. So the balancing act is very difficult. We'll see what they come up with. But does anything there look bullish to you? I realize you have the higher lows, higher highs, but you don't get over that 18-week average. When you do, I'm going to be attracted to the long side of the market. Until that occurs, I rein myself in because as a chartist, I have downside bias. I'm also respecting right here. See this light gray in WTI? That's the 200-week average. It's a hard average to get under and stay under. It's tried it. It doesn't do a real good job of it right here. Now, when will the Biden administration get smart and start buying more oil? I don't know. But telling me between now and then that all the United States can do is buy back 12 million barrels when they're selling aggressively oil out of the strategic reserve under the rest of this congressional act. This is called nonsense. Number one, I explained it. If you have to sell it, you sell it with this hand and your agency buys it back with that. It never leaves. That's the very first thing. Then you're buying your strategic oil back as well. He'll stumble. Stumbler, we'll call him that. So you put it together, you try to come up with the game plan, and I have one for you. It's the holidays. So for new and returning, this does not pertain to my existing subscribers. Don't go out and think I'll cancel and you'll get one of these deals. I won't honor it. We know who you are. And we have people that try that. I can't believe it. Pay us what we're worth. But 50% off any of our research, not the charting courses, the research. If you want to take one for a month, give you an example. It's $7.95 introduction if you've never tried it. You're going to be in for what, $3.50, $4 to try it for a month. Want to buy it for a year? We're going to cut that in half. So normally it's $156. You're suddenly at roughly $78. Come on. Think of what a tick is slippage in the futures markets for you. What about you spider ETF people? Same thing. Everything we have 50 off, it's active right now. So you go to our website and under the word research, you don't need a code. We've set everything up to do it right now. Another way to do it, and that, by the way, is iraepstein.com, as you see here. Another way, move your cursor to the top, take you right to the research area, take advantage. It's for a short time only, right into the Independence holiday. I'm Ira Epstein. I hope you take advantage. Take care.